Okay, so it's just a quick, not a quick, but an important look from a long time frame point of view on the scenarios, because it looks like it's confusing. So I just want to clear some points. I was expecting this 61.8 level here would show a phase breakout under it on a quarterly basis. And it's now evident that that won't happen. And we have seen a really big break under it. So now there is two scenarios I'm looking at. The first one is due to the period, the end of quarter, and we are in the last quarter of the year. And due to the actual readings we have on the indicator, we need a bounce somewhere here. We need something to happen. So price will bounce from there, shy or not shy, but price will bounce in this area. I already showed all the roadmap this morning. So what is interesting to see is now we are on the 61.8 of that measurement of that retracement from 85 to 2008. I don't like a lot this retracement, because at this point of time, euro was even not existing really. I mean, for me, the real start of the euro is there, and that's why I prefer the other retracement I will show you. So this is the first scenario I was saying. We see a bounce from this area, and we could see a follow through inside the end of year due to the reading we have on everything. At the same time, we have the same configuration on DXY, same indicators. We have this trend line, we have those fib, we have a confluence there of a lot of things calling for a pullback here. Due to the period, due to the dates, I would say, and due to the readings, I still think it's possible this is ending, and we could start to see, even if we see a little bit of consolidation there, we could start to see a break and look for that level here. That's the scenario number one. Now, the other scenario is, just 1 second. The other scenario is we see a bounce, because it will happen, but the bounce is shy. Then the indicators breathe a little bit, and then we look for this 90–100% extension that we have been speaking about since months now. And that is the final target of this one. In that case, it would be correlating with DXY looking for his one-to-one extension here. Let me take off the other extension we don't need there. So looking for this one-to-one extension over there. And in this case, we would be double topping. You see how this one-to-one extension comes right on the double top of that area. So that could be, from a price action point of view, I mean, a very nice price action. We would come here, have a double top there, and from there we would start the move down with still a very bearish reading on the indicator. So, and if we measure that, if we look a little bit inside it, we see that from actual price, this would be about 5.7%, as you can see here. It would be 5.7%, something like this, move from there to there. If we do the same thing here, we measure it, we look where we are mostly now, we look here, and we have a 5.6% move to go to there. So that's the second scenario, which is very likely. And both of them, in my opinion, both of them can happen now, really. That's really what I think, and that's why I'm staying on the long side. And even if we have some more room here, we have a few hundred pips to look on the downside. So depending 500 pips, 5 points, 5%, I am much more inclined or happy to be long than to be short. Anyway, if we see, when we will see these bounds, to be more exact, when we'll see these bounds, we could well come back here and then look for the 100% and then go up from there. Or we can, if we have done what we need to do, which is something which could be possible, but then we would not unfold completely this move to the 100% due to the fact that we already violated clearly the 61.8, even the 76.40, 88, 78.60 fib. So the other scenario would be that we would come and then go up from here. We can backtest this area or something like this, and then go up from here, depending on all what will do the central banker and everything by the end of the year. But this is the two scenario, and this is why I wanted to clear that on a long-term time frame, because that's the only way to have a clear idea where we are and where we can go. So 121.15 could be the target on the scenario 2. And now, if not, then the 114.50 to 115.50, 115 to 150, this area up to 115 something would be the scenario with the fourth quarter of this year, showing the start of a pullback and then a continuation on the downside. Of course, that has the same repercussion on the gold and the S&P on scenario 2, which means this area would be much lower, and go under the 4,000 and go up to the 3,200 or something like that, what we have with the mentoring group. So that's really the two things we are looking at. I am open on both of them. If there is a bounce, as I expect here somewhere, and we need to look at the quarterly and the monthly close on Monday, on next Monday, which will be very important update. Then if we have this pullback up to there, we could, as we have done in the past, take some short in this area, looking at the both option, which is first we go to the 100% and bounce from it, or we just pull back like here to the 61.8 area, I mean the lows area of today, and then bounce from it. So that's really what I am looking at for now.